Yes, you're right. One never knows what the worst can be. At one extreme, you can have companies nationalised and disappear. That's the real worst that can happen in any market in the world. And certainly, the guns have been focused on that industry. I mean, in China in particular, where it's been unregulated, it's been booming. We've had the odd personality in that industry who's spoken up, which never goes down too well in China. I'm of course thinking of Jack Ma. So you had Alibaba squarely in the sights of the government, particularly with the listing of Ant Finance. But also more broadly, and it's not just China. I mean, it's happening worldwide, but most recently in Korea. More broadly, governments are looking at exceptional profits generated by some of these companies, and are they doing the right thing? So there's the social divide to be considered, which China is clearly thinking of, and using these companies to raise money, to regulate more. So that's in large part, I would say, now reflected in the ratings. But of course, you're not going to get the exceptional growth that you have had in previous years. So one could argue you're looking more at, I mustn't say utility valuations, but certainly lower valuations going ahead, lower growth going ahead. I would say the Alibabas of this world are still an absolute vital part of China's makeup. So the government are not out to destroy them; they're out to control them. And to tax them. So there's still vital mechanisms for the government to monitor its citizens. And they still want to encourage innovation.
It's a shifting landscape. Yeah, I mean, it's certainly a shifting landscape, isn't it, for companies to operate in, with more of a top-down focus on sharing this wealth. So here's a question on that very topic. Bill in Texas is asking, do you believe that Hong Kong is lost forever as a gateway for Western multinationals doing business in China?
I don't think it is lost forever, but has it changed dramatically from what it was 20 years ago when it was the gateway to China? So it is a gateway to China. It's part of China, so it will become more and more integrated into China. Arguably, it's still easier. Well, it is still easier to do business in Hong Kong than in many parts of the mainland China. So I think it's still very, very attractive as a way into China. But it's no longer the only way into China, and if you're a multinational doing business in China, really you've got to commit to the mainland, and that's absolutely vital. And Hong Kong will become, as we're seeing now, more and more of the mainland, so it will be yet another big Chinese city with quite an international outlook, so quite relatively user-friendly for foreigners. But are we going to see necessarily big listings there and the like, rather than in China itself? I'm not so sure. So the role has changed fundamentally, and maybe not for the better, of course. And that's reflected in what we see happening in Hong Kong now.
Indeed, nothing stands still, right? Shifting sands. So it's been a bit of a tough year for the China markets, so far at least. Not just the regulatory crackdown that they've had to contend with, but also resurgence in COVID, a slowing growth momentum as well in terms of the economic data. And a question here from Jeffrey in the United States is, what is the prospect of MSCI China ETF in the next 12 months, Hugh?
Well, you're right. There are challenges in China. We have the regulatory challenges that we've mentioned. Growth is slowing, although some of the recent numbers have been surprisingly good. But I don't think one can disguise the fact that China's days of tremendous growth are over. But will it still be growing at a rate higher than most developed economies? Yes, it will. But there's really been a shift in emphasis, as we see with the action taken on internet companies, rather than just building tremendous infrastructure, manufacturing, and going gung-ho on the economy. There's far more emphasis on social justice, which is, again, implemented maybe in a clunky fashion in China, but it's hard to argue with that principle of spreading wealth, which ultimately means that rewards out of stock markets are likely to be less than they have been historically. But there again, having seen China pull back sharply, earnings growth will still be coming through. I don't think companies are going to be seeing negative earnings growth as a result of what's going on, but they'll simply be seeing slower earnings growth.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.